The other company that we're going to talk about today is Enterprise Products Partners. A little bit bigger than Kinder Morgan at $60 billion company, about 30% larger than them. When you compare Enterprise Products to Kinder Morgan, what are the main differences folks should see, and what should stand out to you about this company specifically?
Yeah, so the big difference is Enterprise is a master limited partnership, whereas Kinder Morgan's a regular corporation. So master limited partnerships, it can be a little bit more challenging for investors. You can't own those in an IRA, for example. You have to own a regular brokerage account. And then they said what's called a Schedule K1 for taxes versus the 1099 that most investors are familiar with. That can complicate your tax a little bit. They come later in the year. So that's just something to be aware of. The other big difference is whereas Kinder Morgan's natural gas, Enterprise Products Partner diversified. However, natural gas liquids is their big thing, and that's kind of we use them a lot to make petrochemicals. It's one of the main building blocks for plastics. So they're much more focused on that, which is really a niche market, but it's been a very great and profitable niche for them.
Yeah, another difference between them and Kinder Morgan is Enterprise Products has a much more conservative balance sheet relative to Kinder Morgan, down in the threes on their debt to EBITDA. When you look at that part of the business, what kind of stands out to you?
Yeah, it definitely the stronger balance sheet gives them more financial flexibility. They can invest in more growth projects. They have more capacity to make acquisitions if they find good deals. So, in this business, especially with what the industry's been through the past couple of years, the stronger the balance sheets, the better. So that definitely gives them a competitive advantage.
Yeah, when we take a look at the products they're investing in going forward, they have 2 pipelines currently operating in the Permian, but what else are they investing in going forward to kind of start to grow their asset base?
Yeah, so I mentioned that they're very big into the NGLs and petrochemicals. So one of the really interesting deals they just signed was with LyondellBasell Industries. They're going to build, it's called a PDH plant. And what it does, it'll take propane, which is one of those NGLs, and convert it to this basic building block for plastics. And it's going to supply that to the chemical company under a long-term contract. So that's, it fits in well with what they're trying to do, is trying to find outlets for these NGLs. Again, it's kind of like oil and natural gas. We have so much of it here in the States that our options are to use it or to export it. So they're doing both. They're building export projects for the NGLs, and then they're building these petrochemical plants that will use it. And then on the export side, in addition to some NGL export projects, they've got this Seaport Oil Terminal, or the SPOT terminal, and that's an offshore export terminal. And the reason that's interesting is that one of the ways that they can ship oil overseas is these very large crude carriers, which carry 2 million barrels. And they're so big that they can't fit into a lot of the ports. So the only way to fully fill them up is to do it offshore. Otherwise, they have to truck oil. They can kind of partially fill it, and then they'll take these little ships and fill them up. But this allows them to do it much more efficiently. So this one will be built offshore. It'll be a much cheaper and more efficient way to export oil. So that one could come online in a couple of years. And so with these projects, it gives them a lot of visibility and growth. They've got $6 billion in projects currently under construction, another 5 to 10 that they're working on. So a lot of growth coming online with them.
Yeah, and on that export deal, they're partnering with Chevron, so obviously a great partner to have in the oil exploration and production area. When you look at Enterprise Products Partners, the dividend obviously very important for them, yielding over 66%. Excuse me, not 66%. Yeah, that'd be pretty good. Yielding over 6%. Have increased their dividend for 61 straight quarters. Can it get much safer than this dividend that this company has paid out?
It's one of the safest in the midstream sectors. We mentioned, the metrics before, but 85% plus fee-based cash flow, a 1.7 times coverage ratio, which is, really good. And then, the top-notch balance sheet. So this is, in my opinion, one of the safest dividends in the energy industry.
Yeah, and if you can get a safe 6% dividend when it appears that the growth that's going to come out of this region and just the current market environment appears very attractive. When you look at these 3 companies that we've talked about today, so Plains All American, Enterprise Products Partners, and Kinder Morgan, of those 3, if you had to only buy one today as you sit today, which one would you be most excited about buying?
It's a really tough question because I like all three. I own Enterprise and Kinder Morgan personally, so of those two that I already own, I recently added to Enterprise. I just really like the strength of the balance sheet, the diversification, the growth projects they have coming online. We mentioned Kinder Morgan's got, some longer term opportunities in natural gas, but there's a lot more visibility with Enterprise Products Partners in the near term with all those projects that they've signed up. So I that's my favorite right now.